Right, welcome back. Well, we have Sona Comstar. The management is joining us now. It's a strong set of Q4 earnings this time around. The company recorded a solid growth in revenues and EBITDA. It's also won new orders for electric Class 4 trucks worth 500 crores, and their current order book now stands at 21,500 crores. Vivek Vikram Singh, who's the MD and Group CEO at Sona Comstar, joins us now to talk about that. Vivek, thanks a lot for joining in. It has been a very strong set of earnings this time around. So wanted to talk a little bit about what FY24 could bring up. FY23, your revenue growth was in excess of 26%, and you're sitting on a base of around 2,670 crores. Tell us what's the outlook for FY24, considering that you've received a lot of fresh orders in the electric vehicle space?
So, good afternoon, Sonia. Thank you for having us. If you look at the track record in our history for the last 3 years, we have grown at above 25% each year. So yeah, we should continue that trend going forward. We don't give exact future guidance, but that can be expected because that we've been able to deliver 3 out of 3 years.
Okay. Mr. Singh, hi, welcome to the show. I just wanted to discuss what the raw material prices are looking like, because last quarter you had indicated that there's a significant softening. Can you tell us about what is your largest component, alloy steels? How exactly is that performing in terms of prices? And what is the outlook probably going into the entire fiscal?
Hi, Ekta. So thank you for remembering. Yes, aluminium and copper have gone down, which are our second and third highest purchase commodities. Alloy steel actually still has not. So if I compare it to like FY23 average price, it is still as much as FY22. So it's not really gone down. I hope it goes down, but I'm not a macroeconomist, so I don't know.
As in, what does it mean for your business? Because your EBITDA has risen to almost around 200 crores plus this quarter. So based on what you are seeing with raw material movement, what are you envisaging in terms of EBITDA going into the year?
25 to 27% has been our EBITDA range for the last 20 years. And we've seen many commodity cycles go up and down. I think we'll stay in that range. That's what we can predict. Exact movement quarter to quarter is not highly predictable. There are too many factors. And also, it's a pass-through, right? So if it's because it's a pass-through to the customer, what it does is just changes things in the percentages. It doesn't change anything in absolute terms. Okay. So we're not that fussed about it. This time, 27%, actually most of the reason is operating leverage because the growth's fairly high. Right. On a year-on-year basis, I think the EBITDA has grown by 50% while revenue has grown by 35%. So therein lies the margin expansion.
So do you presume that this will continue mainly because you've also guided for 25% growth in this fiscal? That's one. And secondly, if you could break your order book up for us, the net order book that we know as of now is a little over 21,000 crores. How much of that is EV and how much of that is non-EV? Because EV as a proportion of your sales is rising from 14% a couple of years ago to now 26%. Correct.
So hi Mangalam, and I've started recognizing you guys by voice. So 77% is now EV and 23 non-EV. I think it's natural that it will continue to rise, Mangalam, because that's where the industry is going, right? So if you look at North America, especially Europe, if there is a new RFQ for a new vehicle launch, let's say 2 years out, 9 times out of 10, it will be an EV order because nobody is making new gasoline engine-based or diesel engine-based cars in Europe. I think we have 1 or 2 more cycles of new launches away in Europe and North America. India may continue for a bit, but it will increase. It is one of the biggest trends in this industry. So I think that will continue to happen.
Okay. So can you give us some visibility on what the EV orders could look like? In the quarter gone by, you saw a 500 crore order from, for EV trucks in the US. But any more visibility, what could the potential look like? Which are the geographies that you're working on? Is it largely domestic or a lot of export orders could come through as well?
So geographic split is fairly known. It's always more outside India. So 29% is India last year. It's between 25 to 30 pretty much for the last 4 years. So most of the orders too will come from outside, given that's the nature of it. North America is our largest market. Europe used to be second, now it's third behind India. Europe, North America, and India, these are the three markets. EV orders will continue to increase. Order book should continue to increase. If we keep doing what we do well, which is keep introducing better products at an economical price, order book should keep strengthening.
Okay. And this order book of 21,500 crores that you are sitting on currently, can you tell us by when do you plan to execute it? How much of it will be executable in FY24 itself?
Yeah, so that would be giving future guidance, which is what we don't. So it is a 10-year net order book. What is executed from that next year plus the revenue base of this year is literally telling you what is my next year revenue. So we don't do that intentionally. There is no reason to hide it. It is that program launches, which is how usually these things come online, are not in our hands. They're in our customers' hands, and there are often delays. So by committing to a certain number or committing to a certain timeline, we're only setting ourselves up for failure. So we don't like to do that. We leave customers' decisions to them. So it is the 10-year. It will be executed within the 10 years. Most of it will be in the, I would say, if you took it in two halves, first 5 years will be 70%, last 5 years will be 30% of the order book.
Okay. Going into FY24, say, even FY25, if you could break up what your revenue stream or sales stream would look like, how much are you going to get from your traditional business? How much are you going to probably get from the newer avenues or segments that you're looking to enter or have already entered? For example, the sensors and the software segment. How much is it right now? What are you probably going to push it up to?
Yeah, so sensors and software we just acquired. That deal hasn't closed, but that's a very small part of revenue today. I mean, that's just I think last year it was a 9 or 10 million euro business. So won't still be significant in a 2-year time frame. We plan in 10 to 15-year time frame, so that's a little far out. But I'll say 26, let's say FY26, 3 years out, 45 to 50% of our revenue should be from the battery electric segment. That's fairly, I think, certain outcome.
Right. Could you give us a sense on the capex? You have a plan of around 1,000 to 1,100 crores over the next couple of years. The cash that you generated in FY23 was just about 200 odd crores. Do you have additional cash on your books? Do you plan to raise funds for capex? How does that go out?
So next 3 years, you're absolutely right. We're going to be spending 1,000 to 1,100 crores on capex. I think our internal accrual should be enough to take care of that. I don't foresee any funding needs right now. Unless we were to do an acquisition, I don't see any funding requirement, debt or equity.
And is there any acquisition on the cards?
Oh, these things are done only when they're done. So, binary things we can't talk about. Once they're done, we talk about them.
You brought it up. I mean, you brought it up. We use it unless there's an acquisition. We just had to ask.
Yeah, I was just covering the whole thing that will you raise equity or not? I will if we have something nice to buy and it's at a good price and fits our roadmap. Why not?
You gave us the menu, so we thought we'll order one of the dishes from there. Are you in talks with anyone? And if at all you are looking at acquisitions, then, what segments? Just trying to understand the gaps in your portfolio where you would probably consider an inorganic opportunity.
Yeah, so look, our product roadmap is, I think, public information. We disclose it every quarter. It's on our website. So what we are going to do or our strategy or the products we're looking at is public knowledge. And we are going to acquire in that area or immediate adjacencies. We are not one for diversification. We're a very focused company. Anything between the battery to the wheel in an electric vehicle, that's our space. That's how we play. So anything in that, any product that falls within that could be an acquisition opportunity. And I will clarify, we're not in talks with anyone at all. We're always evaluating.
Okay, all right, Mr. Singh, we're going to let you go on that note. Thanks very much for joining in and having a very candid conversation with us. Thank you very much for talking to us. Well, that is Sona BLW Precision, stock up around 0.6%. They are quite bullish going into this fiscal.